I mean, clearly you have pulled back after an incredibly good run, and earnings was a factor there. But I guess the key takeaway from the earnings in an absolute sense is very strong growth in number of customers and depth of relationship with those customers.
Absolutely. The growth at our scale, 46% year-over-year growth at a $400 million quarter, so $1.6 billion revenue run rate, is a pretty astonishing growth trajectory. And that is fueled by how Twilio is helping companies to navigate these difficult times using digital channels of engagement to be able to talk to their customers, to be able to build relationships, and be able to conduct commerce without all the face-to-face aspects that society has traditionally relied upon in order to conduct commerce.
One criticism that some analysts managed to throw your way was that you're too reliant, perhaps, for your revenue on some big single customers like WhatsApp. But what do you say to that?
Well, we have a very diversified customer base. Our revenue constitutes revenue from customers, over 200,000 of them around the world. And that's really every sector of customer, every industry, companies big and small, both the digital disruptor type companies, as well as the Fortune 500 companies and everything in between. So we have a very diversified customer base. And that has really helped us during this year of COVID. Because with so many different customers all engaging in digital transformation, and in this year in particular, digital acceleration of those plans, there's no single sector or single company that influences our company more than any others. That distributed customer base is really key.
So we know you do a lot of business, Jeff, helping your customers communicate via email or messaging with their customers, but there appears to be a lot of investor interest around video. So what are you doing with customers on video, and how much growth is there?
Absolutely. We have a video product in the market, Twilio Video, that allows companies to embed secure, HIPAA-compliant, real-time video into a wide variety of web and mobile applications. And this is allowing a wide variety of new use cases to come about because of COVID, whether it's distance learning, whether it's telemedicine, where we've seen traction with companies like Epic and ZocDoc and hospitals embedding video for accelerated telemedicine visits. But we've also seen neat use cases at companies like Comcast, who allow a virtual technician visit to go diagnose maybe something wrong with your cable modem or your TV without the technician having to enter your home. They can do it all via video. And so we're seeing a great acceleration of the number of use cases that there are for video as companies and whole industries really turn from phase one of COVID, which was like an immediate response to get something in place, to two, them inventing what kind of video experiences they really want and deeply embedding those experiences into the software products that they already use. Epic is a great example of that. Doctors' offices and medical systems want video that's integrated into the medical record system. So it's not a completely separate system. And so Epic, the leading electronic medical records company, embedding video straight into that EMR allows hospitals to get a lot of efficiencies and doctors and patients have a better experience.
Jeff, so much of what you're saying now and on your earnings call last week clearly relates to COVID, and it's clearly boosted your demand significantly. To what extent do you think it's just bringing forward demand that would have taken many years for you to experience, which is clearly a great thing for right now, but might it see you plateau growth for quite some time in the future?
No, this is a trend that's been going on for a very long time and has seen an acceleration because of COVID. Digital transformation is one of the most defining trends of the last decade, as every company in nearly every industry is having to figure out how to use digital channels, digital devices, mobile phones, web applications, and more to engage with customers in these new ways. Now, COVID has provided an acceleration. In fact, we did a survey of 2,500 enterprise decision makers to ask them how COVID affected their digital transformation plans. And interestingly enough, on average, COVID accelerated their digital transformations by 6 years. And so what you see is these are plans that were already being made and products that are already getting built, but those plans have been accelerated. And what we've seen is that means that more budget has been opened up to accelerate these plans. There's more executive interest, things that may not have had C-level visibility inside of a big enterprise suddenly do, because these projects take on existential meaning for many different kinds of companies. Successfully navigating these digital transformations in an era of COVID is so important. I was talking to the CIO of a major retailer who said they saw a multi-year acceleration of their e-commerce traction in just one quarter. And now they're having to invest in all sorts of other aspects to keep up that growth and delight customers and make sure that they're able to continue serving while they're seeing a multi-year acceleration of their digital plans all occur in just weeks and months.